Good morning, good afternoon, good evening, everybody, to all those joining us today on behalf of Abaxx Exchange, Smarter Markets, and Abaxx Technologies. I'm Joe Raia, Chief Commercial Officer of Abaxx Exchange. Last week, the Mark Carney Task Force on Scaling Voluntary Carbon Markets released its much anticipated final report. This report, which comprised over 400 pages, certainly has raised the global awareness of the need for more standardization in carbon markets. Comments on both sides of the debate so far have been surprisingly muted. Our discussions today will focus on emerging trends in the voluntary carbon offset markets and how this report will impact the development of much needed global standards in carbon markets. Joining me today for discussions is a really terrific panel, including Bill Pazos and Thom McMahon, co-founders of AirCarbon Exchange, and Bill being a TS VCM advisor, Bruce Tozer, an Abaxx Senior Carbon Market Advisor, Andy Ertel, CEO of Evolution Markets and Chief Investment Officer of Evolution Environmental Asset Management, and Peter Fusaro, Senior Partner, ESG, Oxford Global Accelerated Ventures. To the panel, I'm really glad that you could all be here with us today. You're all respected in each of your sectors in today's environmental markets. You've really all dedicated your entire careers to finding market-based solutions to climate change. And I encourage everyone on the call today to view their bios of the panelists on LinkedIn and to further engage them in their companies to help further develop this marketplace. So we'll jump right in here. I'm really eager to dig into the task force recommendations and the reactions from everybody on it. But first, we thought it would be important to set the stage here, to set the foundation. Peter Fusaro, you've been at the forefront of the development of these markets for over 4 decades. We have worked together when we set up the Green Exchange back in the mid-2000s. Can you put to task the work of the task force into context of what's gone before us? And what are the voluntary markets? Set the stage here of where we came from and where we are today.
Thank you, Joe. Well, the voluntary markets really came about in the early 2000s, and we had something called the Chicago Climate Exchange, which I was a member of the Trading and Markets Committee. The idea was to push forward compliance-driven markets. Well, in the US, we never got there with Waxman-Markey in the House, but never a Senate bill. So the reality is, the good news is there's a lot of knowledge of carbon markets existing in the world. There are a lot of people that have been to the rodeo before. They know how to do this. The bad news is we wasted about 10 years doing nothing. So the last decade, it was not much of an interest in carbon. However, the last 3-4 months, my phone's been ringing off the hook. People are extremely interested now. The difference now is there's going to be tremendous corporate buying of carbon credits, and the 64 compliance markets aren't going to get the job done. So we're going to need voluntary credits. I'm also getting calls on things like blue carbon, ocean carbon. So the reality is there's much more of a buy side of this market that didn't exist before. As I mentioned, it was voluntary on the Chicago Climate Exchange. And where we go now is the need for better standards on what people are buying, because otherwise we're going to fall into the conundrum of greenwashing, particularly from NGOs, and corporates don't want to do that. So we've got kind of the perfect storm. ESG, SDGs, Sustainable Development Goals, all of this is driving investment into a sector of sustainability. And carbon offsets are going to be the way forward for the next decade in terms of carbon neutrality for many corporate buyers. For example, the airlines and shipping industry have 40-year technology cycles. They're not going to be able to upgrade more than they already have in terms of fuel efficiency, composite materials, et cetera. So they're going to be major buyers. Steel, which is 8% of global greenhouse gas production, is starting to move into hydrogen, but they're going to be big offset buyers. So we have the change is the need to buy credits, and the voluntary market, in my opinion, is going to scale a lot more than $50 and $100 billion, numbers being thrown around. It's going to be a lot larger than anyone realizes. And we have all the pieces. We have the third-party verification companies, we have exchanges, we have brokers, we have all the ecosystem in place. So I'm going to leave it at that, Joe.
Oh, that's a great foundation setting for that, Peter, and it's appreciated. I'll switch over to you, Bill. Now, you and AirCarbon, you've been a participant in the working group, the Mark Carney Task Force working group. What was trying to be achieved there? What does the market need here? Did standardization come out as a recommendation for from the task force in their final report last week?
Yeah, I think it definitely fell short of the mark. But the initial impetus was to create standardization, transparency, and quality, and that those would be the main drivers for scaling the voluntary carbon markets. So that, as a premise, sounds very sort of acceptable to someone like me that believes in market forces. Instead, what came out the other end, pun intended, is actually a very bloated governance body with an upwards of $10 million 3-year budget that potentially will stifle innovation and not allow market forces to go forward. Now, that's where I see the danger. There are other good things that came out of it, but I'll let other people talk about that.
Okay, it is controversial. It certainly seems to be a more top-down approach. I mean, you and Thom have been involved in these markets here for quite a bit. Any further thoughts on how we get to the next step here from the task force? What is the next step? They've set out to put in governance boards. Do you feel that this is a way that we can get to a point of standardization that the market really needs?
I'm wondering if Peter, has the same feeling. When I see this construct, I think a lot about the CDM executive board. Market forces can differentiate quality very easily. You don't need to legislate quality. The market will tell you if your carbon credit is worth 20 cents or if it's worth $100. So, legislating that from the top down is a very dangerous thing, and it just begins. It resonates of the CDM executive board to me.
Got it. So, Andy, your work at Evolution Markets, you guys are arguably the leaders. Evolution Markets being the leaders in environmental markets for many, many years. I worked with you when we set up the Green Exchange back in the mid-2000s. So you've seen it all. You've seen the marketplace come from different aspects of trying to be regulated, trying to be voluntary. How are your clients reacting to these latest recommendations? And what are the trends that you and your brokers are seeing every day now on the desk in the global markets globally and carbon markets that potentially can lead to a global standardization? Do you see any of that coming down the road? What are they asking for?
Well, first of all, I think the market reaction has been fairly muted so far. However, I just want to kind of put this all in perspective. So we arrange several billion tons of carbon a year, and a very small fraction of that in 2020 was on the voluntary side and the offset side, other than stuff that was going to the California market. And our volumes are up 20-25 times this year over last year in the same period. And so there is this big movement, and I think Peter talked a bit about it, but I think we're kind of at this watershed moment, right? Up until now, in my 30 years in the environmental markets, and I did my first carbon trade in 1994, my first SO2 and NOx trades before that. But up until now, it's been the stroke of a pen or the vote of a legislature that actually created these instruments in terms of trading. And now we have consumer sentiment driving corporations, investor requirements driving corporations, and corporations looking to enhance their brand. And in many ways, the voluntary market today looks like an art market. Beauty is in the eye of the beholder. Right. And to get to the scale, to get to 25 billion in reductions by 2030, we've got to step on the gas in a major way. And corporations that are trying to do the right thing need some guidelines and some goalposts. And as the market today exists, it's not there yet. And so I think that the work that the task force is doing is really key and important, but the dirt is going to be in the details going forward. What's going to be included, what's not going to be included. So as interested as I think I am and the marketplace and at Evolution Environmental Asset Management as an investor in offsets, I'm clearly interested in this roadmap. The one thing I will say, maybe a little counterweight to what Bill's saying, I feel a lot more comfortable. Yes, this is heavy-handed, top-down, et cetera, but to get to the scale of reductions that we need to make a difference for the planet, we're going to have to go that way, some shape, somehow. And that's standard. And to be quite frank, the markets that are out there today, the standard in terms of quality is not where it needs to be in terms of offsets. And that's our focus. Our focus is on the premium side of the market, but we need to see at least a much higher standard baseline than exists today. And I hope that the Carney Task Force can get there. Now, there'll be basis markets. Blue carbon will trade at one price and mangroves will trade at a different price, and industrial gas will trade at a different price. And even within those categories, there's going to be 20 different prices, depending on, does Apple opening a store in Saigon tomorrow and they need Saigon credits, or the Boston Red Sox, who we've worked with, becoming carbon neutral, it's Earth Day and they want to do something and they want something Boston-based. What's the price for Boston-based offsets? So I think the market needs this signal. My only
but does everything you've just said, I mean, the task force, is the task force helping you to find all this premium stuff? I mean,
first of all,
doesn't sound like you need them.
I don't think it's the task force's job to find the premium stuff, right? That's our jobs in the private sector. And so I agree with you, Bill, like we don't want it too heavy-handed. And from my perspective, the fact that it's not, the CDM executive board was a UN functionary. And to me, that was really scary in terms of how they operated and how they dealt with CDM and the shortfalls of quality of CDM. And I think that's something that we need to make sure as an industry that we are looking at the highest quality or higher quality standards that we can go above and beyond. So I think, for example, Bill, your platform, there's going to be 20 different things trading as a delta to what the standard is. And I for one, am glad that it's the private sector, NGOs and others being involved and not just the UN body trying to create a market, because that's really scary to me.
I want to drill down into that in a few minutes, but I do want to ask Bruce a question here too. Bruce, you've been around these markets for a long time, as we all have. I mean, again, just very impressive with your work at the banks and advising clients. What are you seeing in your work today, to some of the points that Andy made and Bruce made on and Peter, and for that matter, on all of the issues that you're seeing in the marketplace? What are they telling you, and how are you advising them on, not only from what happened, from the report, but also way before that, as you're starting to, as companies are starting to get involved here?
To the task force, I think, the fact that it's there and is bringing these issues together is a positive thing, and recognizing the need for scaling. I share some of the concerns about top-down approach and bureaucratic approach. I think they want to avoid being a CDM type board and want to be more of an ISO standard. And the closer they can get to that, the better. They've set themselves a very ambitious set of goals, which I think are going to be hard to fulfill. And reality will bite in the sense that, capital ideas will flow to the best places. What I'm seeing from my clients, for some clients who've made commitments without really knowing what they were committing to on, say, net zero, this is a scary thing. But these big companies with good resources do the research, and they find out pretty quickly what is a good credit and what is not a good credit. And so whilst we need standards, and I agree standards will help capital flow and build confidence, I think we need markets to be flexible and allow innovation, what Bill was saying. So the real trade-off here is between having a standard setting board which gives some guidance and a degree of transparency, but allows things to move. And I think, the biggest, scariest things, if you're going for net zero strategies, understanding that means removals. And that's a much narrower pool. And B, once you've realized that and know you've got to go and buy them, realizing that you're going to have some very, very persistent NGOs looking at what you're doing and holding you to account. And that is almost the compliance side of this market. Mm-hmm. So I think people are making commitments and they've got to make commitments. There's a really interesting article in FT today on the MSCI index. There are 9 top companies in terms of pollution will bust the Paris limits in 6 years by themselves. So what? And seriously. So this is the demand wave coming at us. Some of those companies won't really want to do anything, but that's the level of latent demand sitting out there. So we're going to need to find good quality offsets. There'll be people who say it's buying indulgences is rubbish. Doesn't matter. So long as the market, and Peter's right, there's an ecosystem of organizations and knowledge which is still there, we can rebuild from and we can rebuild better. If the task force can help us do that, and reality bites as the task force grows into its tasks, then I think, this is going to be good.
Yep, exactly. I think that, when you look at quality, right? Everybody talks about quality. Peter, you talked about it. Bill, Andy, and everybody talked about the quality of the credits. When that demand is so high, does that lead to less quality credits or anything that's available in the marketplace to come out there because people are searching for ways to buy offsets, right? And is that an issue? Do you see that the market exists as an OTC market? Andy, you see this all the time now, right? It's primarily an OTC market still. So does that OTC market lend itself to less or lower quality credits that you see in the marketplace? I mean, I'll throw that out there. Maybe Andy, you want to maybe start it off there, start the discussion off.
Well, the beauty of OTC markets are that they're bespoke, right? Mm-hmm. We can go to Sears and buy a suit, or we can go to Savile Row and have something custom made. And so it depends. When you talk about Fortune 100 companies and then you talk about what they're trying to do to enhance their brands, they're shopping on Savile Row. And they're looking at removal credits and high cost credits. And now that'll be a portion of what they do. But the OTC market allows you to actually buy specific to your needs. If you're trying to bundle with an LNG cargo, you might have a lower standard in terms of what you're looking for in terms of that offset. So listen, we see, we have clients buying 50 cent or 50 euro cent CERs from historical banked projects. And to be quite frank, that's way below the cost of actually implementing the project, but these are older historical projects. And then you have people that want to spend $100 a ton on a direct air capture or more. I mean, direct air capture today really is a $300-400 a ton technology. And so, but we all see the demand wave coming. Mm-hmm. We looked at it on the Evolution Environmental Asset Management side. We just looked at, the 25% of the Fortune 500 that had taken on a carbon disclosure project commitment, on net zero. And on that alone, 3-4 years out, supply doesn't meet demand.
Mhm.
So when you start looking, and when, Bruce talks about these 9 companies in the MSCI that are going to burst the bubble, right? We don't have Saudi Aramco with a net zero target yet, right? We don't have PetroChina. So what does that mean for prices? I mean, prices have to go higher, but also the biggest challenge today, and if you look historically at where the market's been, the market up until now has been companies buying 1 or 2 years of credits, or going back and looking at settling the score historically. But, this is why we named the company Evolution Markets way back when, was markets change and they grow and they commoditize. And, I think the ultimate goal is a high quality commoditized market that all these other credits can trade as a delta, either negative or positive too. But when we look at what needs to happen, the financing that needs to happen, up until now, the market has been driven by buyers at corporations looking to buy 1 year because the buyer of those credits was in the environmental group or the sustainability group. That will move to treasury, and then eventually it will move to trading, right? And that's where the exchanges that Bill and Thom have been working on, that's where our vision way back when for Green Exchange was. But, we're not there yet. And we have, the market is crawling. We're an infant. And we've got a long way to go till, we look at the billions of tons that we're trading in the EU and California markets and the derivatives that we're trading off of that in terms of swaps and options, et cetera. It's all coming. And what I would say, I think is right, when you guys talk about this infrastructure that's there, this historical context and the knowledge base that's there, the fact that we have these kinds of guys that Bruce and Peter and Thom that have been around markets and these markets for quite some time, and there's 10,000 others ready to build these markets. But and it's going to happen a lot quicker than anything we've ever seen in the environmental markets before.
But is there enough? Go ahead, Bruce. I'm sorry. Go ahead. Jump in there.
On that, Andy, I think also one of the key things on building supply, particularly when you get to nature-based solutions, is people who've actually run and invested and seen a nature-based or an agribusiness type project through. There's a lot of systemic natural risk there, and it doesn't sit on spreadsheets. It can be expressed in spreadsheets, but it's actually real life experience of dealing with these real things which happen in uncontrolled environments. And I think those sorts of skill sets are going to be a real premium on the supply side.
So
the other thing that's going to help is, sorry, go ahead, Andy.
I was just going to say, when we have a proprietary tool that we use on the asset management side to rate and rank every project in the world that exists in the registry. And one of the heaviest weightings is around the developers themselves and their track record. And that is one area that we need to see multiply. There's going to be 100 times the developers out there, and we can all put the right financial structure and systems and standards into place, but if we can't deploy the capital into projects at scale, it really doesn't matter. We're not going to get there.
Yeah, so it's about project risk management on the ground in reality, which, to me, that's going to be the differentiating factor on the supply side.
I honestly think that the biggest thing we need to create is a strong, dependable, and bankable price signal. Once you create a price signal that's dependable and bankable, you can then take that to the bank, finance the projects, and the markets will scale up. If you sit in the OTC world, You're not sending a clear, price signal every time you buy a carbon credit. It's just like buying a boat or a painting. You're not, there's always a what if or a difference. So unless we have standardization and we have price signal that allows investors and speculators to come in, then, we all know we're moving into a carbon constrained world, right? So how do we invest in that today? There's a huge pool of investor capital that wants to go long this asset class. But when they look at it, they go, well, wait a minute, do I buy the project from Malaysia, or do I want the one in Africa, or what do I buy, right? So what we're trying to do is to create an instrument or find the contract that actually allows this unlocks this money. That will create upward pressure on price, and it will drive investment into projects. And the quality of the people that will be executing projects will be in line with the price of the underlying credit that's going to be created. Because I think what's happening now is, the price of carbon is so low that you really can't spend a lot of money on the project itself. But once the price is at 50, now you can start throwing some real talent at these things. So
Peter, you've seen these benchmarks be tried to be developed for many years, right? We tried it back in the early 2000s in their various markets, whether it was carbon or SO2 and NOx markets. How do you see this, from a benchmark perspective and an exchange solution perspective? How do you see that basically fitting into everything that we've been talking about so far?
I see regional markets. I see differentiation on project quality. I don't see any kind of one standard, one futures contract for any of this. It's too diffuse. It has many different factors in where you're doing a project, what you're doing a project for. Look what's happening in red. Red Plus now has taken over quite a bit of the offset market the last 5 years. So I actually would, flight to quality. Bulletproof. At Oxford, we've been given almost 5 million credits in Amazon, and we're going to securitize those. But right now, and we had TUV, the certification. So we want a bulletproof reputational risk, which we have to really talk about. Is quite important. But I don't see one market. I don't see one futures price. We've got two viable futures markets, EU and California. We've got 64 markets on the compliance side and more to come. And then in the US, I don't see any federal legislation coming at all, even though economists love carbon taxes, the politicians don't. So I don't see a carbon tax. So I actually see a big opening for the voluntary markets, a huge opening, and going into manifestation of renewable energy credits or the absurdity of additionality. Come on, we gotta get the train out of the station. We can't worry about pleasing everybody. But my game right now is reputational risk. Have the best quality and have them verified. And it's not going to be one price. It's going to be many different prices in many different locales.
Mm-hmm. So similar to basis markets, the way they developed in global markets for natural gas and for oil, crude oil, or for whatever. But natural gas basis markets are a good example of how that differential between regions, whether it's in one continent or across two different continents.
Yesterday I was talking to South Africa about biodiversity credits. Something you might think it's a pipsqueak market, but it's going to save species. And the U.S. has been very, very progressed on species banking. People don't know that, but they're just they're ideas that can come and be disseminated to other locales. And it's just not that simple.
So Bill and Thom, your work at AirCarbon to develop an exchange-based token structured contracts. How do you see that fit into what Peter's saying, and even what Andy was saying, where you have the Boston Red Sox trying to do one offset, and Vietnam, a coffee shop in Vietnam, trying to do another? How does that all get linked together in an exchange product? Maybe not just only as an OTC product, but even something that can also mitigate risk. Because don't forget, as the cost of these products, as the cost of carbon goes up, you introduce more counterparty risk, more more risk on an OTC side versus what can be done in, say, an exchange traded futures market.
Yeah, I think, I mean, Joe, you and I worked together 20 years ago, and Peter, I've known you for longer than that. You know, market formation is really driven from the bottom up. And so if we look at the two crude oils that developed in the 80s, they're very different today, but they've still got the same name, right? They've evolved over time. What are the baskets? They're actually baskets. Bill and I took an approach on not trying to pick a specific product or a specific region, but we wanted to basketize carbon to sort of flatten out that. And the Corsia compliance framework was the easiest reach initially to do that. And so that's our CET product. And equally, it's the Geo on CME now. That's just a starting point for us. I think I agree with Peter that we're seeing regionalization. I'm seeing silos grow already. Some of them are along political lines, some of them are on our absolute border lines, and a bit of confusion whether you want a carbon tax or I want an ETS that's got voluntary or an ETS that's an allowance market, and they're all sort of getting blurred, the lines. I think the voluntary market, to me, when I started to look at this and we had the first conversations around it, was I wanted fungibility. And I think that's really an important part. Is Andy, are you smiling there? I don't know.
I want fungibility too.
Yeah, right. And I think that's really the key here. And I think the voluntary markets have really got the only opportunity to create fungibility. And I think, you know, so the market formation that we're seeing early on we're dealing with a number, well, we've got a very broad spectrum. We've got as of tonight, we got 132 companies and entities that are signed up for AirCarbon, and they're in various degrees of onboarding. And we've got an active market and it's growing daily. But the interesting thing is we've got some very sophisticated people on board that are really need a lot of education, a lot of hand holding, and they're really bright people. And a lot of them get the S part and a lot of them get the G part. Very few of them get the E part right now. And that's okay. I've done that before. Joe, you and I did that back in Clearpoint launch, you know, post Enron collapse. So it can be done. It's timing though. I think significantly we have a much shorter period of time to allow the market to evolve. I mean, you referenced the Henry Hub. When we launched the hub in 90, I was part of that. I was the chairman of the Nat Gas committee and I traded the first day. We had one price and 1 point, and then we were happy 3 months later that we got a second price and it was called the Chicago City Gate. Now we had 2 points. I think it's 300 plus points today, right? That's an evolution, but that's 30 years for that to get to the mature point where it is. I think carbon, we're already seeing people wanting to use AirCarbon, but coming in going, hey, we like what you're doing, but can you give me the Cambodia hydro? Because I need to, and we actually did a trade like that. So, but we know that person wants to get educated and he wants to come back into the mainstream. Ultimately, they'll be trading baskets or fungible carbon, not that unique spectrum. I think that's
it's similar to that commodity that you always talk about, Thom. I mean, the sense that we have a GNT, for example, and we also have a feature which is called Carbon Finder on the exchange. So the GNT has a tradable price. But if you want your GNT with a specific characteristics, like you want it a certain geography, a certain registry, a certain vintage, a certain rating, whatever it is, you can pick that and send out a specific bid. It's no different than, you know, asking for a different delivery location for a specific contract on any other commodity, right? But there is that reference price, that GNT sort of ties them all together, and then depending on where the demand is for that particular type of credit, it might trade above it or below it. The creation of these contracts is, you know, very subjective, right? So we try it out. Does it make sense? Is there demand for it? And then we see if it works. I'm surprised at the total volume that we see on the CETs, because, you know, in terms of environmental integrity, I'm the first one to say that it's not very good, but it is the tradable asset right now.
Yeah.
So, and I think that's really important. in terms of, and I appreciate that actual acknowledgement, Bill, because I think one of the concerns that I have, and one of the reasons that I think the work of the task force is important, is that we don't want to slay the golden goose. So, you know, I don't think in 1 year at Evolution Markets we've ever had as many new counterparties as we've had right now. And the amount of, you know, just in the California market, the market's up 30% this year, and that's probably the second biggest active market globally, next to the EU system. Obviously, the EU market's up more than 30% over the year. But you know, we've probably seen over 100 million tons in speculators' hands. And so investors and speculators, just like we've seen excitement in the EV space or any other clean technology, there's this rush and people want to be involved and people want to invest, whether they're a small investor or an institutional investor. And so I think this is one of the roles that I think the task force can help and can play, is getting into a tradable instrument where we do set that price point and there is a price for carbon. And what I was saying in terms of financing, or what Bruce was talking about bankability, or Bill, about bankability, you know, it's we've got to get to that point where there's bankability for the developer. Yes. And so my point was, today the market is, from a end user and a consumer perspective, they're still buying out of the sustainability group a year or two. That's not going to finance a project, even if it is $30, $40 a ton. We need 5, 7, 10-year markets. You know, in the US, one of the challenges that we've had in the rec markets is that there was 2 buyers past 3 years in terms of recs, and we're the most active in the, you know, in the renewable world in the US, and we just didn't have that 7 to 10 year curve. And so that's also important, is like getting beyond the spot market and getting beyond bankability.
But some of the smartest clients I work with are taking positions, right? You know, there's an entrepreneur business. It's not $1 billion business, but it's a really good sized business. He gone out, done the work on working out what their real carbon footprint is, what their scope 1, 2, 2 and 3. And then we took the decision last November. We bought 5 years ahead of projects, which are good quality projects, which link to his operations as well. You know, so we're seeing people who are decision makers and owners of some of these businesses getting it, organizing their internal business to reduce their emissions to the max, and then really look at how they cover themselves. And I think we're going to see large corporates do that. And what we're working on is projects, because he's in agribusiness, that are going to be nature-based, that he's going to generate for himself and for others using the skill sets they've got. So I see this as a really exciting time. And it's going to be corporately driven by people who understand the risks that are coming down the line and what the opportunity that creates. I'm with you, Andy. I would like the task force to be really successful in 1 or 2 areas, but do it in a light-handed way that allows innovation. It's critical that we get some core standards in. I would love there to be a core carbon contract which really worked. I think it's going to be harder to achieve than is thought, and it's going to take, you know, some real work around that. But these are the sorts of things we need put in place, and then allow the market to work.
It's, you know, there's been a lot of numbers thrown out there as far as how big the market is. And Andy, you touched on this a little bit, and also Peter a bit. You know, is it $100 billion market? Is that something that's going to bring in new investment, that's going to bring in higher quality credits? So I'll throw that out there to anybody that wants to answer that. But I think that's an important part, because if it is that big of a marketplace, if it is something that, you know, that can entice investments through funds, through investment vehicles, you know, how do you see that bringing in or changing the marketplace, or even developing that standard that you talk about, Bruce? Anybody want to take that? It's
Yeah,
I think it's you got Andy.
I was just going through our projections on the market yesterday, and by 2030, we had it, I think if we looked at some outside forecasts, et cetera, had it on average about 93, 95 billion in terms of value by 2030. And I personally think that's small. I think it's actually bigger than that. That might be the buy side market. I think Thom and you, Joe, you guys know this. I started out in the gas pit on NYMEX way back when. I remember when Thom was the ring chairman and I was just a phone clerk along the way. What I would say is from the wellhead to the burner tip, the average BTU of gas trades 10 times.
Yeah.
So it trades as physical. It might trade as part of a basis swap. It may trade as part of an option. It might trade as a financial index. So there's, but that's the rule of thumb that we've looked at. And, if you just look at the volumes that are going on in the EU market today, they're pretty incredible. And to be quite frank, I think investors are chomping at the bit. I mean, it's one of the reasons that we've created this separate asset management business. We see incredible opportunity. And to be quite frank, there has to be a focus on quality. There has to be a standard significantly above Corsia.
Yep.
If we're going to get there, and there might be, I think, as Peter said, today was the day supposedly the bell was ringing on the Chinese carbon market. I think 15, 18 years ago, Evolution did a joint venture with the Shanghai Carbon Exchange. We gave up on that about 10 years ago, after we hadn't traded 1 ton. But I'm excited that 18 years later or whatever, that they're launching today. And listen, there's going to be a price there, just as there's a price in Colombia, and there's a price in the US, and there's a price in California, and there's a price in Reggie. But for the voluntary market and corporations to achieve what needs to be done on the private sector, we need to see some sort of key standard, just as WTI became the de facto standard for crude oil, and then Brent.
And then,
We had 2 main standards, and now we've got Dubai sour and all that, coming to market.
Well, and you start building out the curve, right? You start building out positions for, not just spot markets. You start building out 1, 2, as we were talking about. You build out your visibility into those pricing of those markets out 3, 5, 10 years. Those are things that really will and should come as a development of a marketplace. And if we get there, if the investment is now, as you say, Andy, it's more than $100 billion, and it's a multiple of that will happen. We've seen. Thom and I and everybody on this call has seen markets develop in regulated listed markets for many, many years, and how that multiplier just begins to expand and brings more transparency to those markets as the curve develops. So I think that's an important part of the development of any marketplace. I think, as you said, Andy, it started in things were tried in the early 2000s, in China and here in the US, and it just takes time to get to that point. Hopefully, the task force will be an impetus for more thought process on this. I think it will. I think it'll be important for everybody to get their collective thoughts together. Okay, here's a recommendation. How do we get to the next step? Really, whether it's pieces of we take up the task force, or do we come and do our own? We like that, but we want to do our own solution. So it is something to I think that's important to really consider. I think we have a few minutes left here. This obviously went pretty quickly. I did want to ask one more question of everybody in the group here. So what probability of success do you assign to the prospect of a well-functioning global carbon market? Is it going to take 2 years? Is it going to be 5 years? Will it happen? What and how do we maybe not go back to the mistakes that were made in the past, as we were just talking about. I'll throw that out there to anybody that wants to answer that. Hey, Peter, you want to take that at all? Or Bruce?
2 to 5 years, because right now, a little bit of the Wild West. So we'll just have to see how it matures. But there's demand. That'll strike innovation.
Clearly. Bruce, you were saying?
2 to 5 years as well. It'll be a bumpy road, but there'll be good things happening, and success will be a panel in 5 years' time, or even 3 years' time, which is a lot younger and more diverse than we are.
Exactly.
And actually, I talked to a point, because the starvation of capital to this market in the last 10 years has frozen the development of talent. And I think one of the great things which is going to happen as a result of it coming to life again is young, really bright kids. They're going to come into this market and push hard and do things that need doing and innovate in a way that no task force or anyone sitting here can imagine. And that's exciting. And success is, for the task force, is actually creating some conditions to allow that to happen, because we need talent, energy, and guts.
Clearly.
Yeah.
Yeah,
I just having been around the business long enough and seen adoption of benchmarks, and I agree with Peter. It's usually somewhere 2 to 5 years, and pretty typically the adoption comes out of crisis. It doesn't come out of, hey, you're running a good market. And if you look at, Peter, it's the truth though. If you look at the TI was launched in '83 and it bumbled along the bottom, but in '86 with the Arab oil crisis, with the price collapse and the netback deals, suddenly people needed a marketplace that had a good hedge and good performance. And same thing in nat gas. We launched in '90 and it was okay, but it was a series of hurricanes, '93 to '95, when the rest of the world couldn't produce any gas and the Henry Hub was still open. And the firms that wouldn't trade a futures contract suddenly turned to the exchange for performance. And I think it's going to be the same way for carbon, but we're already in a global crisis. We're on the cutting edge of a situation where we need a base carbon price of some sort. Obviously, that's our objective, to be part of that at AirCarbon, but more importantly, it's adoption of a standard pricing methodology and an exchange structure that can satisfy that. But building the curve is really important, and the curves got built. The legacy in the benchmarks really out of demand of finance. Guys in the floor weren't pricing something 15 years out on day one, but they did price it when a JP Morgan came in with a deal, because they were pricing 20-year term deals up against Marubeni in Japan. He said, I need a mark-to-market price for 20 years on my term. And then we made the market. I think you're going to see the same scenario for carbon as you get out into the 10, 20, or 30-year life cycles of carbon projects. So finance, I think, is going to drive that long curve. Yeah.
Well, I think Thom, that's
Andy?
a good point. That point of the projects need 10 to 20 years of finance.
Yes.
And then when you look at the sectors that Peter talked about, these are industries that make 20, 30-year investment decisions, right?
Yep.
If you're creating the next 7 series aircraft for Boeing, you're trying to figure out, how many, 20 or 25 years of orders. All of us love, or many of us have flown on Airbus 380. Well, that had a life cycle about 8 to 10 years, and that has not paid off for Airbus. And so they really look at this 20, 30-year investment horizon. The steel industry has to do that.
Yep.
The energy industry up until this point, where it was fixed point, large scale power plants had to do that. Now with solar, we have a new age, certainly a new age in wind. We've got to build an infrastructure for that. But in terms of excitement, in my 25 years plus in the environmental markets, and just to kind of date myself, I was in a room with 12 people doing acid rain trades, SO2 trades, way back when. And that was the entire global market for environmental products. And to see where we are today and where we're headed, and some of the young people that I'm working with, and Bruce was mentioning, it's incredibly exciting. It's incredibly exciting the technology and everything. And I guess the one thing that I would sum up with, and I think this echoes what Bill's kind of saying, is like, the Carney Task Force is used to working at, governmental level and big corporate level, et cetera. And that's all important to actually get us to scale. But let's not forget that what is going to drive this and make it a success is the entrepreneurs globally that will drive these businesses and adapt, whether it's somebody running a forestry project or an ag project on the ground in Central America or Africa, or deploying cook stoves or whatever. But the scale, this is the biggest opportunity of our lifetime. And we have to succeed. So when we talk about, is it a 2 years to the market develop, or 5 years? It's got to be closer to the 2 years, because if you look at the types of reductions that we have to get to by 2030, we better move quick.
You step on the gas for sure. Bruce, you want to comment?
Yeah, just one other thing. Listening to Andy talk about those type of projects, I think one of the really exciting things about the next evolution of this market is all of those types of projects you discussed carry other benefits just other than carbon. There's a really interesting piece on BBC Environment on the news saying, attacking carbon offsets. And then this NGO guy said, yeah, you can criticize offsets to a certain degree, but look at all the other great things you get with it. We've got to make this work. So I think this is really, really exciting. And, plugging the smarter markets concept, this is hosted by Smarter Markets. I think what's really exciting about this is we are going to make markets smarter and able to price the sort of things which are going to be important for sanity on this planet, and that younger people want to see priced in. This is what we're actually talking about, and this is why it's really, really important, and to get it right. So thank you for the opportunity to be part of this today.
Oh, yeah, it's all important. It's just the starting point. We never touched on technology, right? Technology was really hardly even mentioned in the task force, and that's something that will make the market more efficient and maybe get to that 2 year period faster than the 10 or 15 or 20 years that that people think may happen here. Bill, what's your thoughts on how long you think it will take from a timing perspective?
2 to 3. I mean, it's obviously just a guess. One thing just that came to mind when Bruce was talking about the enhancements that come with carbon. It's pretty interesting because we've actually tried to trade the enhancements, but it's very difficult to trade them because there's no quantity, right? You can't, like if you do women empowerment, you can't, there's no quantity attached to it. So the only way that you can actually unlock financial markets to push enhancements is through carbon. So it's an interesting, carbon is an interesting sort of hook where you can attach other enhancements. So if you're a corporation that wants to, promote health or promote, mitigate poverty or whatever, you can do that through the carbon markets. And that's a really cool thing. It's the only way that I can think of that you can actually quantify it and unleash the power of the financial markets.
And that's when you start trying to figure out what are the premium carbon offsets, what's going to trade above the standard, right?
Yeah.
How you track and quantify the sustainable development goals and how they are attached to each project, or how you take an existing project and steer that project towards those goals.
Mm-hmm.
And as Peter said, biodiversity, that is SDG number 1 in terms of what everybody is thinking about on the corporate side today, in terms of what's desirable. And that might change in terms of focus a year, 2 years tomorrow, but that if we're successful, and to be quite frank, I think the OTC markets are going to thrive. Yeah. I think Bill and Thom's markets, I think the exchanges are going to thrive. The interplay between there's a lot of trading that's going on today in terms of, people trading OTC to bring it over and tokenize it today.
Yep.
And so, there's a lot of creativity going on. And again, this is the first inning of at least a 9-inning game.
Yeah.
Well, I did want to be cognizant of everybody's time here. So we are at the top of the hour. I think it went really, really fast. I think the discussion was fantastic. I want to thank all of you for being here. I think it was a really, I think certainly we do want to have these discussions further on down the line to talk about technology. Clearly, there's more work to be done here. And we think that this discussion, and hope that this discussion that we had today can just be the starting point, as you say, Andy, for a catalyst for future debate. I do want to advise, remind everybody to continue to follow our Abaxx Smarter Markets podcast. We've had some great discussions on there on environmental markets that will have more information on this and other important subjects related to not only energy markets, but certainly on environmental markets. So again, thank you all. We didn't get to the questions that we had from the audience. I think it was a great discussion. And look forward to having you guys on again. So thanks you all very much for your time.
Thank you.
Thank you.
Thanks, guys. All right.
Right.
Take care. Bye-bye.
Bye-bye.